A few days back, I posted this poll on YouTube and a similar poll I posted on Telegram. From this, I got to know that you want to see a full series on banking awareness or financial awareness for SBI PO, IBPS PO, IBPS RRB, and all the related examinations. Now, I want to make videos on all the three topics that were mentioned in the poll, but we can only start off with one. So let's start off with a full banking awareness and financial awareness series that will help you crack all kinds of bank exams. Hi, this is Supriyo. Welcome to the first session on banking awareness for SBI PO, IBPS PO, IBPS RRB, and all kinds of different bank exams. So let us take a look at the basic tenets of the series that I'm going to cover. So banking awareness for SBI PO and other exams. Now which are the exams for which this is going to be suitable? Now you need to understand that because I am not going to try to appeal to everybody. I am just trying to make you understand the basic concepts of the banking industry, and I'll take you through the basic banking awareness or the financial awareness that is asked in various bank exams. So this series, it will actually help you with SBI PO. This is the target exam that we are going for. Then it will also help you for IBPS PO. It will also help you for IBPS RRB. So these are the three exams for which these will be most useful. Now I will also make this entire series in a way that it's going to be useful for anybody who is a beginner. So anybody who is a beginner to all these things. So if you are a beginning to the banking industry, if you do not know about all the basic concepts, then this series is definitely going to help you to understand more about banking. And even if you are preparing for exams like the RBI grade B and you are preparing for the SEBI grade A, so sometimes what happens that even in these examinations you need to understand a bit of basics of the banking industry. So core concepts are what we are going to focus on in this video series, and so you understood what exams we are targeting. Now what do you need to do? Now a lot of people ask me for PDFs for these kinds of sessions. Now earlier I have made it very clear why I do not provide PDFs. So there is not going to be any PDF. So I am not going to give you any PDF of these sessions. What you have to do, you can just make short notes on your own on all the things that I am covering. If you are a kinesthetic learner, we have already talked about kinesthetic learners. So if you are a kinesthetic learner, you can make short notes, and if you are a visual learner, then you will just have to watch the videos again and again so that they become ingrained into your memory. And I would advise that you watch this series multiple times if you are new to banking, because I feel that I am going to help you understand the vagaries of the various things that most people are not going to cover in even paid courses that they are going to sell to you. So this is what you need to do. Now how will the series be structured? So my normal videos, they are quite long, isn't it? I have seen a lot of complaints regarding this. So in this series, what I'll be doing, I will be keeping the videos a bit shorter. So they will be shorter length, but the number of videos will be increasing. A lot more number of videos will be there. So I will be increasing the frequency of the uploads of the video. I know I don't upload frequently, but I will be trying to change that so that by the examination date, we can cover each and everything. And whether I'm going to cover dynamic or static, so this is also something that people will be wanting to know. So I will be covering the core concepts, so most of the static concepts. But remember that all the static things that we are going to talk about, all these static things, they did not suddenly appear. They were earlier dynamic and now they have become static. So I hope you understand that the RBI updates, the various updates from different banks, these are the things that have structured these things. And so I will be definitely telling you about the dynamic topics, about the various new developments if a topic demands it. But most of all, I'm going to focus totally on the basic concepts, so anybody can understand this series. You can just pick it up and you can understand. And what are the topics that I'm going to be covering? So I'll just show you what are the topics that you are going to see in this video series. So this banking awareness series, it's going to help you in the SBI PO mains exam, the IBPS PO, the IBPS RRB mains examinations, and it is also going to help you in the interviews of each and every bank exam, and also in the descriptive paper. So I have included a lot of things, and if you want to be a banker, then these things are all essential and you should know each and every topic that I mentioned over here. And I hope that by the end of this series, you will understand all of them. So we are going to start off with introduction introduction to banking. This is what we cover in this video. Then we have the history of banking in India, the types and functions of money, the money multiplier and fractional reserve system. Then we talk about the types of banks in India, the differentiated banks of India, and we will also talk about types of accounts. We'll talk about the different deposit accounts, loan accounts, the NRI and the forex accounts, the PSL norms, the priority sector lending norms, the apex financial bodies or the financial regulators. So we'll talk about the RBI, NABARD, SEBI, etc. And then we take a deep dive into RBI and its functions. We'll talk about the RBI monetary policy. Then we'll talk about the financial markets, so capital and the money markets. Then we get into NPA classification and resolutions, the IBC, the SARFAISI Act, Lok Adalats, etc. Then the type of ATMs, checks, demand drafts, bills of exchange, the various statutory acts. So the NI Act is very important. You also have the Banking Regulation Act, the Foreign Exchange Management Act, etc. Then you have the Basel norms. So Basel 1, 2 and 3 all are very important, especially the Basel 3 norms. And then you have inflation, CPI, WPI, PPI, etc. We'll also cover the international financial organizations like the IMF, World Bank, etc. And of course derivatives, the credit rating agencies, foreign trade, and the latest changes in the banking industry. And of course the banking acronyms and abbreviations, I will be covering it throughout different videos, but let me know if you need any kind of different PDF on it. I might make a compilation and upload it on my Telegram channel. And finally the economic survey and budget, these things are already covered, so I encourage you to go ahead and check my playlists so that you get a full coverage of banking awareness. Okay, so I hope that you understood all about what we are going to cover in this series, and if you feel that I have missed out something, then make sure to write down in the comments and let me know, because my videos, they are not only one way, because you will see that I interact a lot with you and you can give me feedback and I will incorporate all that in my videos. So if I have missed any topics that you want to see, then let me know in the comments and I will definitely include them in this series. And coming to the basic concept of banking, so this is something that I want to take you through because it's very important. And banks, what do they do basically? So banks, they are involved in nothing but risk management. Okay, so remember this thing, that banks, whatever they are doing, all the activities that banks are doing, all of it, you can summarize it into risk management. So banks, they are responsible for managing risk. And you might have heard this word, banks are called financial intermediaries. So why are banks called financial intermediaries? What's the reason for calling banks as financial intermediaries? It's because what bank does, a bank basically helps to actually cycle the money or the currency between different parties inside an economy. So they are doing the financial intermediation work. Now I'll just show you a small thing what happens. So basically if you consider a bank, so consider that this is a bank. Okay, this is a bank, and let's see, there is one man over here, this guy. So this man, he has a surplus of money. Okay, and there is another man over here. So the man over here, he has a deficit of cash. Okay, money is surplus on the blue guy, and the money is actually deficit in the green guy. So this person, what happens is, he will do what? He will deposit his money in the bank. So he will not just deposit just like that, right? He has to get something in return. So what does the bank give him? The bank will actually give him some interest, right? So if I am giving 100 rupees to the bank, if I am this person and I am giving 100 rupees to the bank, I expect that at least I'll be getting 104, 105, 110, etc, etc. I'll be getting some money extra from the bank. That is why I am keeping my money in the bank. And in the same way, this guy, he does not have money. So basically this guy needs money. So what the bank will do? The bank will just lend the money to this guy. So this thing is called a loan, and this thing is called a deposit. So the blue guy, he actually deposits the money in the bank, and the green guy, he is getting the loan from the bank. Now ask yourself, why should a bank give a loan? It has to be profitable for the bank, isn't it? Otherwise, why they would give? So this loan, it is also at a certain interest rate. So if the bank is giving 100 to this guy, then what will happen? The bank will expect that I will be getting at least 115, 120, something like that. So remember this, that the bank has to pay interest to the deposit holders, and the bank will be getting interest from the people who have taken loan. And this is how the basic business of banking actually works. So this is the core business of banking, that the bank, it will be taking what? It will be taking deposits, and that same deposit money the bank will actually be lending on to another person so that they can enjoy that as a loan and give the money back as interest to the bank. So this is how the bank actually works, and this is the basic concept of banking and how banking actually works. So remember this picture, because this picture will help you a lot. You will be able to understand later on why this picture is so important, because this is the traditional work of a bank, and these days what has happened is the work has actually changed, and they have actually started to do something different, but this is the basic concept of banks. So it's very important that we learn it. And now we have to understand, how did banking actually begin? So how did it begin? We have to look at internationally first. So the total assets of the world's banks, what is the total assets? It is around $124 trillion. Now this is towards the beginning of 2019. So right now the figure can be a little bit higher, but roughly it is $124 trillion. And what is the total assets of India's banks? This is also a very important figure. So this is $2.2 trillion as of when? As of March 2019. Now this figure, you are actually not going to find this figure anywhere, because where I have got this, I have actually taken this from the RBI website. So RBI, they have actually told this figure in rupees, and I have converted it into dollars. So the actual figure that has been released by RBI, it is rupees 166 lakh crore. So 166 lakh crore, or you can say that it is 1.6 crore. So that is the total assets of the Indian banking industry. Good to know. And now, where did banking start from? It started in Italy. It started in 11th century Italy. So that was the time that the Renaissance was happening. So we have read about that in history, if you remember the Renaissance. And in the 11th century, what used to happen? They used to barter using different coin systems. So at that point of time in Italy, there were around 7 different types of gold coins that they used to exchange. So there were big cities like Florence, Milan, Siena. These were the important Italian cities that were trade hubs, and they used to have a lot of exchange of these kinds of gold. And what happened, that people felt that, okay, these types of gold, if we transport it by ship or by land, then it becomes very risky, right? So then the concept of banking actually started. And bank, the word bank, it is actually derived from the Italian word banco, and this means bench. Now why bench? The word bench is used because in the 11th century Italian towns, what they used to do, they used to sit at a bench, and that is how they used to transact. So in a bench they would be sitting and just they would be transacting their money, and that is where the bank word came from the Italian word banco. Now what is the oldest bank? The oldest bank is the Banca Monte dei Paschi di Siena in Italy. So it is in business since 1472. So can you believe it? This is the oldest bank in the entire world, and it's in the city of Siena in Italy. So just remember that. And the oldest bank in India, this is very, very important for us. This was the Bank of Hindustan. So it was founded in 1770, and this Bank of Hindustan, it was actually liquidated by 1829. So by 1829, this bank, this did not exist anymore, but the oldest surviving bank, it is the SBI. So how did SBI actually start? So we are going to look at this in future sessions. I'll just tell you that SBI, it started in 1806. So in 1806, there was a bank
called the Bank of Calcutta, and later in 1809 it became the Bank of Bengal. And this was actually the inception of State Bank of India as we know it. And in the future sessions I'll take you through the entire history of SBI. Don't worry, we are going to cover all of it. And so the next thing, it is the introduction to banking, and we already talked about the various concepts about how the banks are operating. So now let's get into a little legal definition. So what does banking mean? If somebody asks you what banking means, then you have to use this definition, which was given in section 5B of the Banking Regulation Act 1949. So this act in 1949, this is the most important act for the banks in India, and section 5B, it actually tells us what banking is. So banking, this means the accepting for the purposes of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawable by check, draft, order or otherwise. So three things are very important that the bank, they have to take for the purpose. What's the purpose? The purpose of lending and investment, and it has to be the deposits of money that we are taking from the public. They have to be repayable on demand or otherwise, because the money that has been actually given as deposit, they will be repayable on demand. For example, in the savings account, they are repayable on demand, and on the FDs or other term deposits, they are not repayable on demand, and they are withdrawable by check, draft, order or otherwise. So this is the entire definition of banking. So make sure that you learn about this, because sometimes some questions might be framed on the Banking Regulation Act and what is the actual definition of banking. Now coming to the banking company, so section 5B of the Banking Regulation Act 1949, it actually defines the banking company. So banking company, it means any company which transacts the business of banking in India. So any company that's going to transact the business of banking in India, they are called a banking company as per the Banking Regulation Act. Now few other sections that we need to remember. Section 7, it says that no other company is allowed to use the words bank, banker or banking in their name. So only the banking company can use these. Section 8, it says that the bank can't buy or sell or barter goods unless it's with reference to bills of exchange. So the buying or selling of the bartering of the goods, that's not allowed. And section 9, this states that the bank cannot hold immovable property, so any houses or something like that, beyond 7 years unless RBI approves. So there is an exception that maximum period normally for a bank to hold these properties, it is 7 years, but if RBI will approve, then they can approve it for another 5 years. So remember this, that normally a bank can hold any kind of property for 7 years, but if RBI approves, then they can go forward with 5 more years. So it will be a total of 12 years. So let's keep it at that for this session, and we are going to continue this banking awareness session in the next videos. I hope that you learned something from this video and that it was beneficial to you. All the information that I am going to give to you is going to be for free. The only thing that I ask of you is that you like this video and share it with your friends, and please subscribe to this channel if you have not done so already, and click on the bell icon so that you, my friend, do not miss any future update. I'll see you in the next one. Bye.